Hello, everyone. My name is Jack Malpass. I am the Business Development Specialist here at Next Generation. I want to thank everybody for attending our webinar today. We're going to be discussing self-directed IRAs for investing in precious metals. Hopefully you learned some valuable information here. If you have any questions, like Greg said, either put them in the chat, or you can wait till after I'm done with my presentation. We have a special guest, Greg Allen from Allen House Metals, who is going to be discussing gold and silver price projections and precious metal positions for 2024, Federal Reserve policy shift, geopolitical tensions, and the dollar decentralization a little later on. I am going to be discussing self-directed IRAs for investing in alternative assets. So, again, any questions you have, either wait till my presentation's over or put them in the chat and we will answer them as we go along. With that being said, I'm going to start off my presentation. So here we go. Everybody can see my screen?
Yeah, I see it clearly.
Okay. So like I said, my name is Jack Malpass. I am the Business Development Specialist here at Next Generation. Next Generation is admin custodian of self-directed IRAs. Okay. We are based in... Sorry? If you guys could put yourself on mute. Like I said, we are admin custodians of self-directed IRAs. We are based in Roseland, New Jersey. We are celebrating our 20th year in business this year, and sit back, relax, and enjoy. So that being said, we are a women-owned company. Jamie is the owner of our company. She is also a Forbes member. Some of her accolades are here on the screen. So we are a customer service oriented company. We pride ourselves on our customer service. We answer the phone. We don't let anything go to voicemail. And we are Ritz-Carlton customer service trained. And hopefully you'll enjoy this presentation. And if you have any questions, let us know. So a little disclaimer before we get started. The information I'm providing is for educational purposes only. We are not fiduciaries nor advisors, so we don't recommend any companies or products or services. If you have any questions about any investment, please feel free to reach out to your financial advisor. And with any investment comes any risk. So must do your due diligence on any investment that you're looking to do. So what is a self-directed IRA? Self-directed IRA is different than your regular IRAs that you have with your Fidelities or your TD Ameritrades or any of those types of investments. We hold non-publicly traded assets. Okay, so your regular IRA is in stocks, bonds, and mutual funds. We hold non-publicly traded assets, and we will get into what those type of investments are in a minute or two. But investments in non-traditional assets within retirement have been around since 1974. Self-directed IRAs investments keeps your funds tax advantaged or tax-free depending account type and your circumstances. So these are the types of plans that can be self-directed. Okay, traditionals for tax-deferred investing, Roth for tax-free investing. For self-employed people, you can do a SEP. You could do a solo K plan. You can also move money from a beneficiary, or also known as an inherited IRA account. Covered Ls can be done for your children for education. Health savings plans for your medical, but you have to qualify for that. So here are the options for funding an account. So the two ways that you can fund a self-directed IRA is either through contributions, okay? Depending on what type of account you have, depends on how much you can contribute to a plan, whether it's a traditional, a Roth, a SEP, or a solo plan. They have their contribution levels that you can use to open a self-directed IRA. Transfer, you can transfer money from like accounts, like a traditional to a traditional, a Roth to a Roth. So two like accounts, there's no tax implications because you're moving it from one retirement plan to another. So two like accounts. Rollovers. Rollovers can be done with unlike account, like a 401k, or you could do an IRA rollover, depending on however you want to do it. Those are the different other ways you can do and move money from one retirement plan to another. Of course, in a 401k can be done directly or indirectly. So indirectly, your custodian would cut a check, and then you have 60 days to move the money before you'll be taxed on it. Or direct rollover means the custodian will cut the check right to us. You will not, there's no middleman, so you don't have to worry about 60 days for you before you get taxed. And the last one is conversions. You have a traditional IRA and you want to move it to or convert it to a Roth, you can most certainly do that also. So these are the types of ways you can fund your self-directed IRA using your qualified retirement money. There's some restrictions from IRA, restrictions for disqualified people. Okay, so you are your IRA is disqualified from yourself. So for this topic of precious metals, you can't purchase metals and hold them directly. They have to be held in a depository. Okay. The other investments we'll just be discussing, whether you're doing a real estate investment, you can't use your IRA to buy a house for yourself, family members, which are ascendants and descendants. Okay. Some financial professionals that you cannot do any investments with. Okay. So these people are disqualified from your IRA. Now, with some of these investments that I will be discussing, even though they are disqualified from your IRA, in certain circumstances, you can partner with an IRA, your own IRA, or these people, okay? And again, we'll go over some of those investments. If you have any questions on any of this, please let us know. Some of the things that you cannot do in an IRA that you can invest in is in life insurance, collectibles, and like we said in the beginning, anything that's publicly traded cannot be held in a self-directed IRA. If you're looking to do regular stocks, bonds, and mutual funds, you could look for a company that'll hold a brokerage account for you, and then that will work with a self-directed IRA company, and then you can move your money back and forth from your brokerage account to your self-directed IRA. Okay, so these are just some of the people that are disqualified from your IRA. Okay, now the people who are not disqualified from your IRA are your brothers, your sisters, your aunts, uncles, and cousins. Okay, I'm not trying to confuse anybody here, but so there is a list of people who you can do business with, and this is the list of people who you cannot do business with, unless you're going to partner with them on an investment or a deal. Okay. So here are some of the possible IRA investments that you can do. Some of the more popular ones: real estate. It has to be a new investment. It cannot be an investment that you already own. Okay, unless these investments are held in a self-directed IRA company like ours, which you can transfer in kind to us, any of these investments. But these are some of the more popular ones: real estate, multifamily, single family, syndications are very popular, notes, tax liens, private placements. But for most part of this presentation, we're going to be discussing precious metals. Okay, but just know that as long as it's not publicly traded, you can come to me with an idea or an investment idea, and we'll let you know if it's something that can be held in a self-directed IRA. Okay, so these are just some options. So types of metals that are allowed in a self-directed IRA. There's 4 different types of metals that can be held. These are the first 2, gold, as long as it meets the 99.5 minimum fineness, the American eagle, American buffalo, Australian kangaroo, Philharmonic, Canadian maple leaf, and then other various bars and rounds meeting certain criteria. Platinum, same thing, finest 99.5. Here are a list of these that you can do in platinum. After our conversation, I do have these, so don't feel like you have to write them all down. I do have a white paper on this. I could send you the different metal classes and everything that's associated with those classes. Okay, so gold, platinum, and then here are the other 2, silver and palladium. Okay, again, 99.9 fineness, 99.95 fineness. Here is a list of the different ones that you can invest in. Again, these cannot be held personally. They have to be held in a depository, and we'll go over how that's done. But you can't physically hold these metals. They have to be bought through a broker, and then the broker will send them off to the depository. Okay, but again, I have these on a list for you. If anybody needs that, I can most certainly send it to you. Okay, so how it works, out of precious metals. So find a precious metals dealer and depository you're comfortable working with. Okay, set up an account with a dealer in the name of your IRA. Okay, and I will go over how to set up an account and how this information, you will get this information. But the account will be in the name of your IRA, not your own. That's what keeps it tax advantaged or tax free, depending on what type of IRA you have. Okay, contact Next Generation and direct them to make the purchase from your dealer. You'll be receiving a bi-direction letter. Okay, you'll need an invoice or an order sheet for the metals. Okay, and then a confirmation from the depository that they will hold the metals in the name of your IRA. Okay, once that's all done and accomplished and all the paperwork is finalized by our compliance team, Next Generation sends the funds from your IRA to the dealer, and the dealer will send the metals to your depository. Okay, so that's basically how it works. Once your account is set up with you, set up with us, our transactions team will work with you with all the paperwork that you need to get all this done for you. So again, don't feel overwhelmed by looking at this. This is what we're here for, and we'll take care of everything and help you out with that. Okay. So the setup and process timeline. Opening an account only takes about 1 to 2 business days. Just filling out an application. We get certain information from you. Your account is open, and now you have your IRA name that you will be provided in an email. So you'll have your account number and how everything will be in the name of your IRA. Okay. Funding your account, moving your money from your custodian that you currently are with, or doing contributions to funding. This step tends to cause the most delays in funding. This is because we're essentially moving at the pace of the other custodian. But when the client is involved, they can occasionally move the process along a little faster. Okay, so funding your account means contacting the custodian that you are currently with and liquidating how much you want to move. Okay, just leaving it in your IRA, your 401k, whatever type of plan you have, leaving it in there in a cash position. Once it's in a cash position, it can be moved over to us. And again, our transactions team would supply you with the necessary documents that you will need to give to your custodian to start the process of the rollover or transfer, however the money will be moved over to us. Okay. Last step, compliance. We'll take a look at all the paperwork, make sure it is all filled out correctly. Everything is in the name of the IRA. And once that process is finished and done, you're ready to make your investment for you. And that's pretty much how the process works for a self-directed IRA. Opening an account, the types of metals that you can purchase. Again, you cannot hold the metals, it has to be new investments unless the investment is in a self-directed IRA custodian like us, in which we can do a transfer in kind. But if you have any questions, feel free to reach out to me, and I will help you out. My job is to educate you on how to do this. So we're here for you. And if you have any questions, there's my phone number. I will put it in the chat. So if you want to reach out to me, or when we're done with this, if you have any questions for Greg about anything, feel free to reach out to both of us. Okay. With that, thank you very much for listening. And I will now hand it over to Greg, who will do his presentation. So I'm going to stop sharing screen.
Awesome. And again, thanks for having us on, Jack. We're real excited about it. And just while we're getting things flipped over, I just want to say to anyone in the chat, I know there can be a lot of information here, and it seems like there's a few steps. It is a real simple process, and don't hesitate to reach out. Jack, the team over at Next Generation, just like myself and my team over at Allen House Metals, we're happy to help field any questions, but we make sure that we make the process real easy for you. So just as I share my screen here, I do want to say to everyone, there's a couple points in the presentation. We're going to go over a couple of charts just at a high level. If anyone has any questions whatsoever about the charts, do not hesitate to ask. Throw your questions up in the chat, and I'm happy to address them. Any questions about other things as well, and we'll make sure that we get to those. So just starting here, as I get through, really, we're a family business, and we operate on a set of core values. I think everyone here would know, right? There's no one-size-fits-all approach to investing, whether that be metals or anything else. And so for us, it's really important to understand, what are your objectives? Because we want to help you, make a tailor-made portfolio, something that really fits your needs, right? Whether your objectives are capital appreciation or, whether it's holding tight and preserving your purchasing power against inflation, both remain paramount to us in terms of helping you with your investment. So just as I move forward here, we are a registered dealer with a company called Dill & Gage, okay? Dill & Gage is the authorized purchaser for most government mints around the world, but that includes the United States Mint, the Canadian Mint, amongst many others. Now, what does that mean? Really, Dill & Gage does not deal at the retail level. They deal at an institutional level. They import the lion's share of the gold, silver, platinum, and palladium that comes into the country, and they distribute it to banks and a select number of dealers like myself to be able to service the public. They've been around since 1976, and we're real happy to be to do business with them, rather. They're about the best name you can be associated with in metals. As Jack said, a big thing when it comes to precious metals in IRAs, you cannot take physical possession of it. The IRS prevents that. You are allowed to use whichever depository so long as they're accredited and approved. We prefer international depository services. The reason I mention this and why we work with them so closely, they are a wholly owned subsidiary of Dill & Gage. They are COMEX approved, they are ICE approved, and they do, pardon the pun, they have the gold standard of approval, which is the London Bullion Market Association, or LBMA. They are LBMA approved as well. A lot of our clients, we recommend that they use IDS Texas specifically. And for full transparency, the reason we recommend them is because the location for the Texas depository is actually in the same building as where we have our warehouse, where we distribute metals from. And so it makes buying and selling a quicker process. Instead of having to worry about things shipping when you're buying and selling, quite literally, they move it right out of the vault and back into the warehouse, and the transaction's completed. So just to reiterate, everything that you do in precious metals with Allen House Metals, you're liquid, right? We move out of cash into metal, and out of metal into cash pretty much instantly. And just moving forward here, why precious metals, right? I think a big thing is we're looking for a safe haven, right? Precious metals typically soar in value when paper markets plunge. But aside from that, they also soar in value when you have things like geopolitical tensions and uncertainty. Really, though, when we look at it over a macro perspective, over the last 50 years, precious metals have shown that not only are they a consistent performer, but specifically over the last 50 years in a study done from 1968 to 2018, it showed that precious metals, gold and silver specifically, consistently outperform paper markets like stock markets. And so not only do we look to precious metals as a safe haven, but really when we think of putting precious metals into a portfolio, we're looking at something that can be not only a safe haven, but a consistent performer in your portfolio. So moving forward here, one thing about gold, silver, platinum, and palladium all alike, they're guaranteed to hold intrinsic value, right? They rise in price over time with the cost of inflation. And so really, when we think of a value holding asset and following rising in time with the cost of inflation, what that means is that if you were to buy $10,000 worth of gold, let's say, in 1925, and let's say at the time that $10,000 would buy you quite a grandiose house. That same $10,000 in gold, if you held on to it today, 100 years later, if that same grandiose house is going for millions of dollars, let's just pick $5 million as an example, that $10,000 worth of gold that would buy you the house for $10,000 in the 1920s or 30s would buy you that same grandiose house today, even though it would be several $1 million. Now, and one thing I really want to emphasize here, and we'll get into it as we go, the most important thing to consider when we're looking at precious metals is the dollar, okay? You can look at many different factors. I know geopolitical tensions are one. I know, supply and demand are another, but the number one indicator for why precious metals go up and go down in value is the dollar, because they're an inverse dollar trade, meaning if the value of the dollar goes down, the price of gold and silver go up. If the value of the dollar goes up, the price of gold and silver go down. And so part of the reason we're going to touch on the Federal Reserve's forward-looking guidance today and monetary policy in the dollar is because that is the number one indicator of where precious metals will go in price. Now, one other thing I wanted to address, because a lot of people will ask the question, when you're looking at metals, should I buy an ETF, like an exchange traded fund, or should I buy physical? One of the biggest reasons why a lot of people will look to ETFs as opposed to physical is liquidity. And so I would say we take that whole issue away in the sense you are liquid completely at all times. But another thing I'd like to just bring to the forefront is ETFs, such as most popular ones like GLD and SLV. Those funds, up until the pandemic, were traditionally backed with the purchase of physical metal, meaning as investors purchased the fund, they would purchase physical metal. Like in GLD, they buy gold, or in SLV, they buy silver to back the fund. Well, since 2020, they've changed the prospectus. The change was made, I believe, on page 7. And they no longer are required to, nor do they, back those funds with purchases of physical metal. And in fact, and this was a revelation that was come to by an analyst, Peter Krauth, it was real interesting to see, is since then, not only have they not purchased any new gold or silver, they've actually sold off 70% of the holdings within those funds of physical metal. And the reason they've done that is they don't need to sink the capital into metal anymore since they've changed the prospectus. So a major reason that people are moving away from ETFs and into physical is because they're not backing these funds in physical metal. What then drives the price up and down? Well, if it's not the asset itself, it's really volume of investors that are buying or selling units in the fund. And significantly speaking, one of the most important changes in this prospectus is that they can they can liquidate the fund at any time and give investors liquidation value without investor consent. And so this is a big reason we're seeing a lot of people move into physical who previously would have been considering buying an ETF. So moving forward here, and this is something real important to look at. What we're looking at here is a dot plot. Okay, now what we see happen at now, this is the most up-to-date one. We had one in December. This is the one that came out in March, okay? And you'll see, I don't know if you guys can track my mouse here, but if we look in the left column that shows 2024, the majority of decision makers at the Fed, even though we have not seen a cut to date, they believe that rates should settle between 4.5% and 4.75%. This would require 75 basis points or 0.75% of cuts to current interest rates. Okay. Now, it's important to note this is the exact same reading that the decision makers at the Fed gave us in December. It hasn't changed where they believe rates should go. However, the timeline on these cuts, originally, the public believed that the Fed would begin these cuts in May or June. It's currently looking like these cuts will begin in the fall, September, October range. The overall estimates are that we'll see 3 25 basis point cuts this year. Now, before I move on to the other factors in this, it's important to note the Fed gives us forward guidance because they want to prepare investors and institutions alike. The big thing is they want to prepare the banks, the hedge funds, the big institutions for what they're going to do with monetary policy so that they can change their investments and adjust their portfolio to prepare with how that will affect the market. So they take the forward guidance very seriously. When they say they're going to do something, they typically almost 100% of the time follow through with that. And if they change course, they give forward guidance in advance of that. If we look at where they see rates here in 2025, you'll see they're looking at rates anywhere between 3.75 and 4%. Today, we have rates at 5.25% to 5.5%. So overall, the Fed is projecting 1.5% of cuts between 2024 and 2025. What's important to note, and I mention this because I'm sure a lot of people here have brokerage accounts just like I do and many people do. The major banks were calling for 125 basis points this year of cuts. That's not going to happen. The Fed said at the start of the year they wouldn't do that, and they're maintaining that right now that they won't do that. The reason these major banks wanted these cuts is they believe additional cuts will be instrumental into the price increases in equities markets. It's not going to happen. The Fed is holding steady and they're not changing course. Now, again, why are we looking at this? We need to see this because it'll tell us where the dollar's going to go. What happens, and I have a chart that we're going to look at in a couple of slides, what happens to the dollar when we see rates cut? The dollar loses value. What happens to the dollar when we see rates hiked? The dollar is propped up and increases in value on the index. That's not to say everybody here knows our purchasing power has been affected, even though the dollar last year rose on the index. We all know our purchasing power still declined. But in terms of the dollar on the index, this is the most important information. So just moving on to the next slide here. As I was saying, current interest rates are at 5.25% to 5.5%. We're looking at 3 possible interest rate cuts this year, and that will bring us down to 4.75 to 4.5 to 4.75%. Now, as we move forward here, this chart, and I'm sorry it's a little blurry, I wanted to get this chart for everyone because it shows the dollar over a 3-year period. And just before I go into analysis on this, I want to let everyone know, if you're wondering to yourself, well, hey, I understand what you're saying about the Fed's policy and what they're saying they're going to do and how this will affect the dollar. The Fed has a tool that most analysts and financial analysts will use to judge the percentage chance of interest rate cuts or hikes at meetings that we can all use. Remember or take a note of it. It's called the CME Fed Watch tool. If you go online, you can look at this. It'll show you the percentage chance of interest rate moves at every meeting. You can check it now. And what it is it's a poll of decision makers and experts that will show you what the percentage chance is of these hikes or cuts at each meeting. So looking at this 3-year dollar chart, one thing that I really want to highlight is how interest rate hikes and cuts affect the dollar. I know I was just saying to people that hikes increase the value of the dollar on the index, cuts drop the value of the dollar on the index. What you're going to see is at the start of this chart, bottom left, the dollar's hovering at 89 on the index. The peak of the chart comes around September of October of last year, and you'll see it at 114 on the index. Over the last 20 years, the dollar has traded between a strong line of support at 72 and a strong line of resistance of 104 on the index. It's traded in that range as interest rates have fluctuated from 0 to 2.5%. So the first thing I want to address is, well, if resistance was at 104, we saw it go to almost an all-time high here at 114. Why did it do that this time? Well, over the last few cycles, 2015, 2018, and before that, like I was saying, the Fed went from 0 to 2.5%. This time, they went from 0 to 5.5%. And so the increase in rate hikes is what rose the value of the dollar. Now, what you see is at the end of 2023, right here, where you see this red line and the dollar almost takes a straight line down. The reason we saw this movement is because at the December Fed meeting, Jerome Powell came out in his minutes and he said they believe they reached the terminal level of rate, meaning no more hikes coming. We've reached the peak. So what happens to the dollar when we're at peak rate? It begins to sell off. Now, we've been trading in this range bound between 101 and 105 throughout the year. This is what's going on with the dollar as we anticipate the cuts to happen. Now, leading analysts, leading economists in the industry forecast that as we see these cuts over the next 18 to 24 months, and as we see rates come down to 3 and below 3% eventually, they expect the dollar to return to 89 on the index, which is where you see it here in early 2022, and potentially 72 on the index if they continue to cut below 3%. Again, the reason this is significant is because gold and silver have an inverse relationship to the US dollar. So as the dollar comes down, gold and silver prices go up. Just since we've seen the dollar fall from 114 on the index here, we've seen gold move up in price by almost 20%, and we've seen silver move up in price by over 30%. And this just goes to attest to what I'm saying. As the dollar's coming down, we're seeing the prices of gold and silver move up. So moving forward here, where do we see gold going this year? Okay, Citigroup and UBS both have projected that gold will move to new record highs. It already moved through the previous record. They both predict that gold will move through new record highs this year and next year. We saw a 13% increase in the price of gold last year in 23. UBS is predicting that we're going to see gold pop out at $2,600 this year. Now, the significant thing is Solita Marcelli. She's the Chief Investment Officer for the Americas for UBS Global Wealth Management. She's indicated to investors to purchase gold anywhere you can around $2,300. Okay, gold today is sitting around $2,340. This to them is considered a dip. Again, their projections on the year are $2,600. Okay, now Citigroup, on the other hand, and Max Layton, who you see mentioned here, they're quoting that they see gold going to $3,000 within the next 12 months. Why is that? Just like we were talking about, you'll see the quote, lowering rates into the end of the year and early next year is certainly going to be the backbone of the next move higher in gold, okay? While we do have the other factors at our back, keep in mind, we have the geopolitical tensions, we have the economic uncertainty. The number one factor, again, that we're looking at is the dollar, okay? So moving on, this is a chart in gold I want to use for everyone. And like I was saying earlier, if there are any questions about the chart, please don't hesitate to ask, okay? And Jack, if you could help me out, if anything pops up, just let me know, because I know I'm a little blinders on here. This chart for gold is across the last year, okay? Now, previously, $2,000 was a major line of resistance for gold. We've moved well past that, and we expect $2,300 here to be the new floor. Now, what we see on this chart, and I know it's labeled here, but you see a flag-like drifting rectangle. This is a technical term on the chart. Some people call it a flag, other people call it a pennant pattern, okay? You'll see you have one down here at roughly 2150, and we're forming a larger one here up between $2,350 and $2,400. Now, what does a flag or a pennant indicate? A flag or a pennant is a shift in momentum. It can go either upwards or downwards in momentum, okay? What we see here, and why you'll see the line coming down into that triangle flag pattern, is when we see a market move up, like gold here, and a big swing, we'll then see it consolidate. The flag pattern moves as it consolidates in a tighter and tighter range. So the way to think of this, a really easy way to think of it is, think of like a spring or a coil, okay? As the flag is developed, the highs and lows get tighter and tighter. So think of it like you're compressing a spring or compressing a coil. When they reach their tightest range, like here, you'll see the point. It's like you're letting go of that spring and it's exploding up. So you see the last time we saw a flag pattern here, mid-March on the chart, we saw the move ultimately go from 21.50 up to 24.50, a $300 move. Now, remember, we just saw the projections from UBS and from Citigroup. The projections are $2,600 this year with an eventual move to $3,000. Well, remember, we're in the mid $2,300 range right now, $2,340. If we are seeing that consolidate that spring compress, and then we let go again, if we look at the last move of $300 with that pattern, it puts us in the exact range of the UBS predictions. So real important to note on the charts there. Now, what about silver? Moving forward in silver. One big thing that we've seen, silver this year has already moved from $22 to $32, right? It's up almost 40%, almost 50. Now, where do analysts see it going? Daniel Gawley, he's a senior analyst for TD Bank Securities. One thing he points out is last time silver saw $30 an ounce and it held it, it only took 10 weeks to reach $50 silver. Now, if you've been around and you've looked at metals before, you've heard people mention this before, right? The last time this happened was in 2011. This is something we haven't talked about, like I was just saying, for over a decade. The difference this time is we built a strong base around $30 an ounce. Because yes, it hit $50 in 10 weeks, but it came right back down last time. People still made money, still sold out at the high. The important thing here is we've been building a strong base with higher highs and higher lows and moving in a healthy market, right? Healthy markets move 2 steps forwards, half a step back. Any markets you see move up in straight lines, come down in straight lines. Simple as that. The primary reason that TD Bank and others cite for their projections here ultimately for silver reaching $50 by the end of 2025, also a big change, not 10 weeks. They're forecasting over the next 17 months the potential to hit 50, is because of the dollar devaluation from interest rate cuts. That's the number one reason they're looking at this movement. Now, this chart here, I actually pulled this morning. This is silver. And this chart shows silver over almost the last 2 years. There's a couple significant things I want to point out. And we're looking at, what does the chart say that backs up what these analysts are saying? Well, number one, when we look at, you'll see this blue line. Okay, this blue line here is the 50-day moving average. This red line here is the 200-day moving average. Okay, you'll see the blue line crosses through the red line here in mid-March, conveniently just when the market started to pop up. What that tool is called is a golden cross. It's one of the most bullish signs you can see in a chart. This is not exclusive to silver. This works whether you're looking at Apple, Google, text, anything. When you see a golden cross, it's one of the most bullish signs you can see in a chart. The second thing I want to highlight, this is forming as we speak, but if we look at the very top in the chart, what does this look like? We're forming a pennant or a flag pattern in silver just the same way we saw it forming in gold, okay? What this pennant pattern is going to do is, like I said, it's going to consolidate. The highs and the lows are going to consolidate, get tighter and tighter like that coil until it explodes. The last thing I want to highlight on this chart is you have what's called a cup and handle right here. Very short-term cup and handle. What a cup and handle is it's a bullish signal in a chart to predict future pricing, okay? The opposite, the flip side of a cup and handle is called a bubble, okay? Now, this tool, like I said, it's not exclusive to precious metals. You can use this on charts for anything, just like tech stocks or anything in between. The depth of the cup here will indicate the future price gain. And if we look at the depth of the cup here, we're looking at a total cup depth in the short term of roughly $5, okay? This would show us that in the short term, we can expect a $5 move in the price of silver. Where does $5 put us? It puts us in the high 30s, so roughly $37 an ounce, okay? Now, just moving on here, this is another important thing, right? We're talking about the dollar, how precious metals are affected by interest rate cuts, because that's the cycle we're moving into, and the dollar. This analysis is from Peter Krauth, who I've cited before. He is the head analyst for Resource Maven. Over the last 20 years, we've had 3 major interest rate cutting cycles. The average gain in the price of silver over the 3 rate cutting cycles we've seen is 413%. Now, keep in mind, silver's at $32 and change today. We're projecting a move over the next 17 months to 50, right? We're not talking even doubling. I won't get into saying that would put silver at over $120 an ounce. I'm not saying that. This is just the average we've seen over rate cutting cycles in the 21st century. Now, other important thing to note, when looking at buying precious metals, a lot of people will ask, should I buy gold? Should I buy silver? To a lesser degree, platinum and palladium. One of the most important tools to learn about when you're looking at buying precious metals is the gold to silver ratio, okay? Gold and silver trade in tandem, okay? Gold's typically the first mover because it's bought by central banks. Silver then follows, okay? Important to note, right now in terms of demand, 1/5, a quarter to 1/5, so 20 to 25% of the world's gold supply is being purchased just by central banks. So that leaves only 75% of the demand left to go around to investors, other banking institutions, jewelry, industry, things like this. Now, when we look at the gold to silver ratio, and as opposed to that, rather, before I move forward, silver is more of an industrial metal. It's the second most useful commodity in the world. It's in everything that you see that has electronics. And more than not, silver has something gold doesn't have, and that is a supply and demand imbalance. You'll remember at the top of the presentation, I was talking about how these ETFs don't back with physical metal anymore. The reason is silver is tracking to be at 150 million ounce deficit this year. And that means there is going to be demand in excess of 200 million ounces than what's available this year for silver. Now, like I was saying, gold and silver, they trade in tandem, right? The ratio on average in the 20th century was 40 to 1. In the 21st century, we've been in between roughly 55, 60 to 1. And what does that mean? It means for every ounce of gold in the 20th century, you could buy 40 ounces of silver on average. It means for every ounce of gold in the 21st century, you could buy 55 to 60 ounces of silver, okay? Now, we use this tool to indicate what is more undervalued, gold or silver, okay? If the ratio is wider than 60 to 1, we say, well, hey, silver's undervalued, it's the better buy. If we see it under 60 to 1, we say, well, hey, that shows gold's undervalued, it's the better buy. As we're speaking today, the ratio is roughly 74 to 1, okay? And it's closing, It was at 87 to 1 just 2 months ago. The important thing to note is as this ratio gets to 80 to 1, silver typically outruns gold 4.5% to 1 on a percentage basis. And so what this ratio is telling us right now, if you're looking for a value play, silver is the better buy than gold. You're not going to go wrong with gold, as you've seen from the projections. It still has upward momentum. Gold's traditionally steady eddy. It preserves purchasing power. Silver is something that you'll see more capital appreciation in, though. Now, moving forward, and this I just find is really informative. A lot of people, gold and silver are an alternative asset, just like Jack was saying. And a lot of people say to themselves, well, you know, does that mean it's really a big internationally traded market? The market cap for gold is 13.7 trillion. Market cap for silver is 1.3 trillion. If we put that together, that's a $15 trillion market cap. Compare that to Apple. I mean, you're looking at 5 times the size of a market compared to Apple, one of the largest corporations worldwide. Really interesting there. Now, this is a study done by CPM Group. Okay, it's the 50-year study. I mentioned this earlier on. What they wanted to do is they studied from 1968 to 2018. What are the optimal levels of allocations for both soaring economies and contracting economies? What's the most consistent performing portfolio allocation? What they came up with was that for a traditional person, right, like you and me, the standard allocation was 25% metal, 75% other investments. When they talk about other investments, they're talking stocks, bonds, and fixed incomes, and T-bills, effectively, cash, right? Now, this was a portfolio that they showed with this allocation on average in 50 years performed at roughly 7.5% to 8% a year for 50 years, okay? Now, you'll see to the right, an aggressive investor. They indicate an aggressive investor in this case, not only is someone willing to take more risk, but someone who has upwards of 5 income streams should ideally have 10% of their portfolio in precious metals. Now, again, these are just the findings of the study, right? But an example, a keen example, on the far right, you'll see Ray Dalio's allocation. Ray Dalio, for those of you who don't know, he's the founder of Bridgewater, largest hedge fund in the world. He holds 7.5% of his portfolio in precious metals. Lion's share is in gold, but in precious metals. Now, additionally, from this study and moving forward, this chart is a risk-reward chart from CPM Group from that 50-year study. And it's confusing to read, so we'll bear with it here. But what this says is the risk that you will lose out on taking more risky investments that could return you a higher amount, okay? Because they're looking at gold and silver as a safe haven. The reward or return, rather, being the return percentage. What you'll see here is that investors who put 70% of their portfolio actually yielded higher returns consistently, over 9% over the course of this 50-year study. Investors that stayed at 25 to 30% yielded between 7.5% and 8%. The significant portion here is, though, if you're willing to take some of these additional riskier investments, you could return more money. And so this is saying 25 to 30% is the optimal allocation because you can afford to take other risks and other investments and maintain steady returns. Now, just moving forward, and I kind of want to touch, I know Jack was touching on fineness requirements for precious metals to buy. I can get passionate in this, and I really want to make sure if anyone learns anything from this webinar, please do not buy proof coins. Do not buy graded coins. These will be sold as metals by metals dealers, or rather coin dealers, in your IRA, and they'll say they're not collector's items, which you can skirt around. They are collector's items. They pay a high premium for these products, and they don't get bought back at that premium. Do not fall victim to these graded coins, okay? What we specialize in is what's called investor bars, okay? Investor bars, they're all London Bullion Market approved, meaning they're all LBMA approved. This means they're tradable on the open market. They all have serial numbers on them with a hologram on the back so they can be authenticated. We also have coins and rounds like the Eagles and like the Buffaloes, and those are great too. But when you're looking to buy precious metals, the ultimate thing you need to look at is what maintains that premium and has the thinnest spread between bid and ask, meaning the price you buy it at and the price you sell it at, okay? The big thing with coins is they will be sold at a huge premium because they're more intricate. And don't get me wrong, if you're buying them for a gift for your or collecting them at home or buying them for your grandkids, they're beautiful to look at. But you don't want to invest in them. They're sold at a huge premium and they don't maintain it. They're bought back well under that premium. If you take one thing from this, you want to look at the spread between bid and ask. So the most important thing is you want to get an LBMA approved product, right? Eagles, buffalo rounds, more importantly, kilogram bars of gold, platinum, silver, 100-ounce bars of silver. These are fantastic. They have the lowest premium between bid and ask. They all have serial numbers. And frankly, it's the best way to invest in them. Okay. The other thing, like I said, not only do not buy those proof coins and graded coins, but focus on the dollar. The most important thing is the dollar. Okay. Now, I know Jack will probably send this out to everyone. I just want to let everyone know, if you want to take a screenshot of this or take note of this, this is my direct line. It's not the main office number. This is a direct line to me and my direct email. If you have any questions, don't hesitate to reach out to me. We're happy to do reviews like we did today with the charts. We're happy to answer any questions you have and kind of inform you on the process. The one thing that I would say additionally is typically what we'll do is if you contact me and you refer to the webinar, we do offer webinar attendees discounts compared to the normal prices people pay. All you have to do is reference the Next Generation webinar, and we'll make sure that that we do that for you. So that's about the end of my presentation here. I'm gonna stop my screen sharing and I'll hand it back over to you. Just give me 1 second here, Jack, and I'll get that going. Make host. There you go. Should be over to you. And I know I went over a lot, everybody, but again, if you have any questions now or at any point, please don't hesitate to ask.
Thank you very much, Greg. That was a lot of information. It was excellent. Very good.
Thanks, Jack.
So I just want to go over a few things before we wrap this up. Self-directed IRAs is a great way to leverage against inflation. Okay. Alternative investments is a great way to diversify your portfolio. Okay. Self-directed IRAs are different than your regular IRAs in that self-directed IRAs, you go out there, you find the investment that you want to choose from, whether it's precious metals, whether you want to do an investment in real estate, or you want to lend money using your IRA. These are things that you cannot do in your regular IRA. Your regular IRAs are limited to the portfolios that they have in their platform, whether it's high risk, low risk, yada, yada, whatever. But in a self-directed IRA, you go out there, you look for the investment that you want to invest in, that you feel comfortable in, not something that somebody's making you do in a portfolio. Okay. So self-directed IRAs, great way. Any kind of investment that's not publicly traded, life insurance, or like what Greg was talking about, collectibles, art, cars, certain kinds of coins. These are not IRS does not allow these in a self-directed IRA. So be careful in what in the coins that you're looking to invest in, and any other investments that you're looking to do. So that is pretty much how I want to wrap it up. If anybody has any questions, feel free to ask right now. Or if nobody has any questions, a lot of this information is readily available that I have for you. Please feel free to reach out to us. Greg's company and some other companies are listed on our professional resource page. There are companies that investments had been done by our clients in the past. Again, you don't necessarily have to use anybody on our professional resource page. If you have a different investment in mind, or you want to work with your own brokerage or your own broker, or depository, feel free to run it by us. And again, thank you everybody for attending. And if you have any questions, we're here for you.
Yeah, thanks again, Jack, and thanks everyone for tuning in. I know it's a lot of information, but we really do appreciate you all joining us.
Anybody have any questions? Okay.
Might have overloaded everyone.
Oh, wait, we have one. Oh, no. You're welcome, Lindy.
Welcome, Lindy.
Oh, wait. Go ahead.
Yes, this is Ruby. Will the recording be sent out?
The recording will be on our website.
Okay.
For you under our webinar page on our website.
Okay.
It'll be under nextgenerationtrust.com. And if you go to information and education, you'll see webinars.
Okay.
It'll be on there. It'll probably be posted to our YouTube page also. And I think Greg will have it on his
We'll
platform
be posting
also.
it on our YouTube page as well. And if for some reason you can't find it, I don't know about you, Jack, but I'm sure, I know we posted our contact info. Whether you reach out to me or reach out to Jack, will be happy to send you a link to it as well so you can access it.
Okay. Thank you.
You're welcome.
Anybody else? Again, thank you so much, everybody, for attending. Keep an eye out for more webinars that we'll be doing going forward. And Greg, again, thank you so much for your time and for all the information. And it was great to see you again.
Awesome. Thanks, Jack. It was a pleasure. I appreciate you having us on again.
My pleasure. Have a great day, guys.
Bye.